Today's lesson will be Chapter 22, Problem 22-3B. Okay, hold on just a minute. I don't see what I can share with you. So I'm going to pause the screen for just a minute till I can get set up properly. Let me try that again. Okay, you should be able to see on your screen now, problem 22-3B. And what we're going to be doing today is we're going to be preparing a whole lot of different budgets. We're going to begin with the sales budget, and then we are going to move on and we're going to calculate the production budget. And from that, we're going to calculate another budget, and we're going to keep going until we do all the budgets for this particular problem. And I should tell you that all the budgets are connected together, so it's very important that you do these budgets in the order that they ask you to. We're going to start with the sales budget first. And for this company, we're going to be the Gold Medal Athletic Company. And we're going to prepare a sales budget first from the information that they've given to us. We're going to be a company that is selling both batting helmets and football helmets. And we have estimated the sales for March to be 1,200 batting helmets. That's going to cost us, or what we're going to sell it for, excuse me, is $40 per unit. The football helmets, we're expecting to sell 6,500 units at a selling price of $160 per unit. And so we need this information when we are calculating what's going to go into the sales budget. So if you bear with me for just a second till I can get my screen straight here. We're going to scroll on down. We're going to look at the sales budget. You can see that they've already got a sales budget set up for you. So all you have to do is fill in the information in the blocks that they want you to fill in. So for the batting helmets, what we need to know is what the unit sales volume is that we are expecting for this period of time. And the sales units for the batting helmets is 1,200 units. We're going to also pick up the sales units for the football units. And that too was given. This information has 6,500 football helmets that we're expecting to sell. And then what you're going to want to do is you're going to want to put in the unit selling price. The selling price of the batting helmets is $40 per unit. And it's $160 per unit for the football helmets. So all this information was given up above in Part A. And by the way, this information would come from our sales department. We would gather the information from the sales department about the number of sales units that they're expecting to sell and the selling price of those units. We then are going to have to find the total sales by multiplying the unit volume sales of sales times the unit selling price. So I'm going to need a calculator to do that. So let me pull my calculator down here where we can see it. And so we're going to take 1,200 units in our calculator, and we're going to multiply that by 40 units. And that will give you 48,000. We're going to do the same thing with the football helmets. We're going to take the number of helmets, which is 6,500, and we're going to multiply that by 160. That's the selling price per football helmet. Woo! And that gives us way too much. So let's try this again. Okay, so 1,040,000 is the total amount of sales dollars that we are expecting for the football helmets. So we're going to end up adding the two of these together to get the total revenue from the sales. And it's always a good idea when you are working on a budget that has a lot of computations involved to go ahead and check your work. So I'm going to check my work. And you can see we've got the sales budget right. You have to have the sales budget correct because the information from the sales budget is going to feed into the production budget, which is the next budget that they're asking you to prepare. The production budget is going to tell us how many units that we're going to need to produce during that period of time. We're going to start with the expected units to be sold, which comes straight off of the sales budget. The batting helmets was 1,200 units. And the football helmets was 6,500 units. Notice they're asking for units right now. Then what we're going to do is we're going to add back in the desired ending inventory that we want at March 31st. See, we want to have a little bit of these units left over in case we sell more than what we had planned to sell. So remember, when you're preparing budgets, it's just an estimated amount. It's not an exact amount. So we want to have a few of these helmets left over in case we sell more than what we planned. So they tell you the line that they want here is, or the amounts that they want here is for the desired ending inventory on March 31st. Now this ending inventory would be what they want as finished goods ending inventory for both of the helmets. So we're going to look at our ending inventory information that was given up above. And you can see in part C, they give you the ending inventory for March. And they've given you finished products here. And we want 50 units of the batting helmets and 220 units of the football helmets. So we're going to copy that into the information below for the production budget. So it's 50 units of batting helmets, and 220 units of the football helmets that they wanted to have at least in their ending inventory in case we sell more than what we think that we're going to sell. Then to find the total units required, you simply add the two of these together. And again, it's a good idea to check your work often because you want to make sure that you have your information correct to this point. Then what you're going to do is you're going to subtract out your ending inventory. And, excuse me, you're going to subtract out your beginning inventory that was estimated. So we're going to go back up to our information here, and we're going to look for our estimated beginning inventories, and we're going to look for the finished products. And you can see that they had batting helmets at 40 units, football helmets at 240 units. And you're going to subtract this beginning inventory, and what that will leave you with is the total units to be produced. And we're going to check our work. And the production budget, the total units to be produced for the production budget are 1,210 of the batting helmets and 6,480 of the football helmets. I'm going to stop sharing this with you for just a second, and I'll come back to it in just a minute. So bear with me, class. Okay, I'm going to try this one more time. So hold on, please. All right. Okay, you should be able to see where we left off just a second ago. All right, with your direct materials purchases budget, that's the next budget that you would prepare. You need your production budget, the one that you prepared earlier, to feed into this budget. Notice in the first part of this, they're wanting you to write down the units required for production. Batting helmets, and they want to know the plastic and the foam lining that you're going to need to buy. And so we're going to be looking for plastic to see how much it takes of the plastic to produce the batting helmets. And what we want to know is the total number of pounds of plastic that we're going to need to purchase that is required for the batting helmets. So there's some computations here that we're going to have to look at. First of all, you need to remember how many units are required for production of the batting helmets. And you see your production budget here. The batting helmets that we need to produce during this time period is 1,210 units. So I'm going to go ahead and put that in my calculator. And then I'm going to multiply this number of units that are produced by the amount of plastic that's required to produce 1 unit. And the amount of plastic that's required to produce 1 unit is found in your given information at the top. So I'm going to scroll up to the top, and I'm going to look at the amount of materials that we're going to be using in production. And that's important D here, direct materials used in production. When we're manufacturing the batting helmets, we're going to use some plastic. And remember, the batting helmets was 1,210 units that we're going to produce. We're going to multiply this by the amount of pounds of plastic per unit of product. So 1,210 times 1.5 pounds will give you 1,452 pounds of plastic that we're going to use in the batting helmets. So I'm going to go back to my direct materials purchases budget, and I'm going to enter in 1452. And again, I got that by taking the total units produced times the amount of plastic that it takes to produce one unit. You're going to do the same thing for the plastic for the football helmets. The football helmets that we're going to be producing this time, according to our budget, our production budget is 6,480. So I'm going to put that in my calculator first. And we're going to multiply this amount by the amount of plastic that it takes to produce the football helmets. So we're going to go back up to the top. We're going to look at part D. And for the football helmets, the plastic amount was 3.5 pounds. So this 6,480 is going to be multiplied by 3.5 pounds. And the total pounds will be 22,680 of plastic that it's going to take for the football helmets. Then what they want you to do is put in the desired units of ending inventory as of March 31st. So we're going to have some plastic material that we want to have left over in case our employees make a mistake when they're producing these helmets. And so we're going to be looking for the March 31st amount of plastic that we want to have left over. And so we just got to look for that. And in part C, they tell us the desired ending inventories at March 31st of our direct materials. Our plastic is going to be 50 pounds. So 50 pounds is going to go here. And then we're going to combine all of these together to find the total units that are required of the plastic material, the total pounds of plastic that is required at this point. So 1452 plus 22,680 plus 50 pounds is going to give you 24,182. And this is the number of pounds of plastic so far that we are requiring. But notice right underneath this, they're hoping that they'll have some inventory left over from the beginning of the period. And so what we have to do is we have to look at the March 1st number of units that we have in inventory for our plastic. And our direct materials beginning inventory plastic is 90 pounds. And we're going to subtract that from this 24,182. And that will leave us with 24,092 pounds. Then once we know how many pounds it is that we need to purchase, we're going to multiply that by the unit price, and that will give us our total direct materials cost of the plastic for this period of time. So I'm going to look for the unit price of the plastic. And you just have to look for it, class, so bear with me as I search for it. Okay, that's in part E. Plastic is $6 per pound. So I'm going to multiply $6 per pound times 24,092 units. And that's going to give me 867,312 as the total direct materials units to be purchased. And it's a good idea to check your work because as you can see here, I messed up right here. So let's go back and see what this said to do. It said to add it. So you're going to add all of these items together. And obviously I got the wrong total there. So let me try this again. 1452 plus 22,680 plus 50 is 24,184. Is 24,182. So evidently I just copied it over there wrong. I'm going to check my work just to make sure that I added it right this time. And then I did. And so 24,182 less 90 equals 24,092 times 6 . $144,552. Now we got our calculations right for our plastic. So even your instructor makes a mistake sometimes, so it's always a good idea to check your work as you go so that you can catch up with those. Because again, the information that you put in here is going to go somewhere else eventually. And so you need to make sure that each budget is prepared correctly and in order. So we're going to do the same thing for the foam lining. We're going to take the number of units that are required for production for the batting helmets. The amount of units is 1,210, but we're going to multiply it this time by the foam lining that's required for 1 unit of material. So I'm going to put in my calculator 1,210 units to be produced of the batting helmets. I'm trying to figure out what the foam lining amount is here. So I'm going to multiply the 1,210 times the amount of foam that it takes to produce those batting helmets, and it's 50 or half of a pound here, 50% of a pound or 1/2 of a pound. So I'm going to take the 1210 and I'm going to multiply that by 50%, and that will give me 605 pounds that I need of the foam lining for the batting helmets. For the football helmets, the number of helmets is 6480. So I'm going to put 6480 here into my calculator. That's the number of helmets. And then I'm going to multiply it by the amount of foam lining for the football helmets. The foam lining for the football helmets is 1.5 pounds. So I'm going to multiply this by 1.5. And that's going to give me 9,720 pounds. And then we're going to look for the desired ending inventory units of foam lining that we're going to have left over. And the amount is 65. And then we're going to combine all of these together to get our total units. And I'm going to check my work just to make sure I've got the total units right there, so it doesn't mess something else up later on. And so we're okay there. Now we're going to look for our beginning inventory units that we're going to subtract out from this of the foam lining. So our beginning inventory units of the foam lining was 80 pounds. And this is going to be deducted from the total units required for the foam lining. And that will leave you with 10,310 units that are to be purchased. And we're going to multiply that 10,310 by the unit price of the foam lining. So the price for the foam lining is $4 per pound. So we're going to multiply this by $4, and that will give you $41,240 is the total amount of the direct materials that you're going to be purchasing. This is the dollar amount of the direct materials of the foam lining that you'll need to purchase during this period of time. So I'm going to check my work just to make sure my math is correct so far. We're okay so far. And then I'm going to total these up. The plastic and the foam lining together is going to give me the total cost of the materials that I need to purchase. So I've already got the foam lining in the calculator. I'm going to add to it the cost of the plastic. And so the total amount that I'm going to be purchasing in materials for this budgeted amount is $185.92. Again, it's a good idea to check your work. Just make sure your math is correct. And that's our direct materials purchases budget. The next budget that we're going to prepare is the direct labor cost budget. And the first thing that they want you to find is the number of hours that it takes to produce the batting helmets. So what we need to know is the number of helmets that we produced for our batting helmets. And the number of helmets that we produce comes from the production budget. So this 1,210 batting helmets, I'm going to put that in my calculator. I'm trying to find out how much time it takes to produce the batting helmets in the molding department. So I'm going to look at my given information. And my direct labor requirements comes from Part F. And we're talking about the batting helmets, and we're talking about the molding department. And there are 20 parts of 1 hour to produce one of these units. So I've got to multiply the number of batting helmets times 20% of an hour. And what that's going to give me is the total amount of hours that are spent producing the batting helmets in the molding department. So this 242 is going to be entered into the first block. For the batting helmets, the hours required for production is 242 hours. For the football helmets, the number of units that we're producing is 6,480. So I'm going to take 6,480 from our production budget, and I'm going to determine how much time it takes to produce the football helmets in the molding department. I'm going to look for this information right here. So 6,480 for the football helmets in the molding department. It takes a half an hour to produce those. This is the number of units that we had of football helmets to produce. We're going to multiply that by 1/2 or 50%. And again, I'm getting that right there. It's 50, half an hour for each unit produced. The total hours are 3,240. And then we're going to combine both hours together for the batting helmets and the football helmets to get the total hours required. And I'm going to check my work just to make sure my math is correct there. And it isn't, so I must have added wrong. Yep, 4 and 4 is 8, isn't it? Let me try that one more time. All right. And then what you're going to do is you're going to pick up the hourly rate that the molding department charges for its direct labor. And let's see how much labor it was. All right. Here's the labor requirements. The molding department charges $20 per hour. So I'm going to put $20 per hour in here for the molding department. See, we're in the molding department column here. And then I'm going to multiply the total hours by 20. And if I multiplied right, it's $69,640. I'll check my work just to make sure I've multiplied everything correctly. And we are correct at this point. So you're going to do the same thing for the assembly department. We're going to start with the batting helmets and determine the time that it takes to produce the batting helmets in the assembly department. So from our production budget, we're going to pick up the batting helmets, which was $12.10. And then I'm going to multiply that by the time it takes to produce the batting helmets in the assembly department. The batting helmets, it takes a half an hour to produce those. So we're going to multiply this $12.10 by half an hour for the assembly department. And that gives us 605 hours for the batting helmets. And so for our football helmets, we're going to be producing 6,480 of those. That comes from the production budget. And we're going to multiply it by the time it takes to produce the football helmets in the assembly department. And it's 1.8 hours. So we're going to multiply this by 1.8. Let me try that again. Doesn't seem to be right. Okay. Let's look at the direct labor hours. I'm going to have to hunt it again. I've lost where it is. Direct labor requirements. We're doing the football helmets, assembly department. It's 1.8 hours. Then I'm going to multiply that by the number of football helmets produced from our production budget, which is 6,480. And that's going to give me 11,664 hours. And I'm going to check my work just to make sure my math's right. And it is. So I could go ahead and total up these. So we're going to add 605 hours to this. And that's going to give you 12,269 hours. And then we're going to multiply it by the hourly rate for the assembly department. the assembly department hourly rate is $14 per hour. Then I'm going to multiply the $14 per hour times the total hours required for the assembly department. And that's going to give me 171,766. And to find the total direct labor cost, we're going to add the assembly department's labor to the molding department's labor. And that's going to give us 241,406. And again, I'm going to check my work because this budget is going to feed into some other budgets. So the total amount of the direct labor cost is this amount that they're estimating for this period of time. The next budget is the factory overhead budget. We're going to start with our indirect factory wages. And the factory overhead costs are all given to you. You don't have to do any calculations. You just need to be able to write them down. So 86,000 is going to be copied here. Then we're going to look for the depreciation, which is 12,000. The power and light was 4,000. And the insurance and property tax is 2,300. So this budget's kind of straightforward. You just copy down what is your factory overhead cost, and then you're going to combine them all together to get a total. $86,000 plus 12,000 plus 4,000 plus 2,300 equals 104,300. Again, it's a good idea to check your work just to make sure your math's right. Ready to do cost of goods sold budget. In the cost of goods sold budget, they have a lot of information that they want you to fill in. And the cost of goods sold budget starts with your beginning finished goods inventory. So we're going to look for our finished goods beginning amount of inventory. And I'm going to fill in these parts first. We're going to add to it our work in process beginning inventory. Then our direct materials, we would start with our direct materials beginning inventory. And then we would add to our direct materials beginning inventory what we purchase of materials. Our direct materials purchases would go next. And once we know our direct materials purchase, when they add it to the beginning direct materials inventory, it'll give you the cost of the direct materials available for use during that period of time. Then we're going to subtract out our direct materials ending inventory. So you got to make sure you pick up the ending inventory here. to get the direct materials costs that are placed into production. This is your cost of goods manufactured that we talked about from chapter 18, the first chapter that we covered in this class, and kind of going back and picking up some of the same things that you should have already learned how to do. And so we find the total cost of the direct materials, then we got to add our direct labor cost to that and our factory overhead cost to that to get the total manufacturing cost, which are your materials, labor, and overhead. Once you have your total manufacturing cost, you can add them to the beginning work in process, and that will give you the total work in process during this period of time. And from that total work in process during this period of time, we're going to need to subtract out or less out the work in process ending inventory, and that will give you the cost of the goods that are manufactured. And then the cost of goods manufactured will be added to the finished goods beginning inventory to give you the cost of the finished goods available for sale. And then we're going to subtract out our finished goods ending inventory. So it's a good idea to write these in first. And this follows the format of where they are combining the cost of goods sold with the cost of goods manufactured. If you'll remember, the beginning finished goods inventory plus your cost of goods manufactured gives you what you have available to sell, less your finished goods ending inventory tells you what you've got for cost of goods sold. So I'm just going to click on check my work just to make sure that I've got all my amounts entered in there. And if you'll do it like this, then you can search for your finished goods inventory. And the finished goods inventory at the beginning of the period is going to be a calculation that you have to know how to do. And those calculations I've got in an Excel spreadsheet. So I'm going to flip back and forth for just a minute. Hopefully this will work out between my Excel worksheet and my Cengage budget. So I'm going to stop sharing this with you and I'm going to go to my Excel spreadsheet that I've created to show you how to get to the information that you need. So here are my computations for the cost of goods sold budget. We're going to start by finding what the finished goods beginning inventory is. And what we have to do is we have to look at each one of the products that we're producing. The batting helmets and the football helmets are going here. We need to know the units that are in the beginning inventory at March 1st. Finished goods inventory at March 1st is what we're looking for here. And that's in the information that was given in Cengage. You also want to find the unit cost of that beginning finished goods inventory. And these amounts are found in the given information in Cengage. Then what you'll do is just multiply the two of these to find the total cost of the finished goods beginning inventory for your batting helmets. And then you do the same thing for your football helmets. You multiply these two to get this, and then we add them together. And this 19,480 is what we're going to pull back over and put on our cost of goods sold budget. So this is how they're calculating the beginning finished goods inventory. So the beginning finished goods inventory, this information here is given. You will multiply it to find the total and then add the two together to get the total cost. So 19,480 is your beginning finished goods inventory. So I'm going to stop sharing this with you. I'm going to go back to my Cengage and I'm going to enter that information where you can find it. So we're right here, and the beginning finished goods inventory was 19,480. Again, I'm going to give you the computations for this so that you'll have something to go back to and look at. But this is where we're getting this information. So 19,480 is coming from the spreadsheet that I have prepared for you, where we're figuring up the beginning amount of the finished goods inventory. It might be a good idea to check your work as you go along with this cost of goods sold budget, because there's a lot of computations that are going to go into that. The next thing that they want you to put in is your work in process inventory on March 1st. And it is given in part 6 here. The beginning inventory of March is a given amount of 15,800 or 15,300. So we're going to plug that in. That's the given amount that we got right there, goes here. That's your work in process at the beginning of March. They've also given you the end of March. So if you wanted to, you could come down here where we've got work in process ending inventory, and you could put that amount in there if you wanted to, which is 14,800. It doesn't matter to me how you come up with the amounts as long as you get the correct amounts. And so I'm just filling that in from there. So that's given information that they have for you. The next thing I want to look for is my direct materials beginning inventory. And this amount I'm going to have to determine. So again, I'm going to go to my Excel spreadsheet, and we'll stop sharing this with you, and we're going to look for our direct materials beginning inventory. So I've calculated the direct materials beginning inventory here. My materials were plastic and foam. The number of pounds that I needed was a given amount from the given information in Cengage. The cost per pound is $6. That too was given. You're going to simply multiply the two of these to get 540 as the total cost of the plastic beginning inventory. For your foam, the beginning number of pounds was 80 pounds at a cost per pound of $4. This information was given. You're going to multiply that. It's going to give you $320. Add the two together and it will give you $860. We're going to pick up this $860 amount and put it in the direct materials beginning inventory on our cost of goods sold budget. So we'll stop sharing again. We're going to flip back to Cengage. And you're going to put in the amount for your direct materials beginning inventory, which was $860 worth. The next thing they want is your direct materials purchases. That's a given amount, or actually it's not given, it's what we found in our purchases budget. So we're going to go to our purchases budget that we calculated before. Do you see right here is the total direct materials to be purchased, 185,792. We're going to combine our beginning inventory of materials plus what we purchased together, and that will give us what we have used. So our beginning inventory plus what we purchased, 185, 792, is going to give us an amount of 186,652. It might be a good idea to check your work at this point. All right, so we're okay so far. The next thing we need to find is the ending direct materials inventory, and you have to do some calculations to find that. And the calculations are on my Excel spreadsheet. So I'm going to go back to my Excel spreadsheet and I'm going to pick up my ending materials inventory amount. The ending materials inventory amount I have calculated is $560. This information is given and you just multiply it. 560 is what I'm going to put in to the blank in Cengage. So back to Cengage. And the ending inventory of our materials was $560. Notice we're subtracting the ending inventory from what we had available for sale. So I'm going to put into my calculator 186,652. That's that right there. And I'm going to subtract out my ending inventory of 560. That's going to give you 185,532. So it's a good idea to check your work. And obviously it was a good idea that I did that because I did something wrong. So let's try this again. It's 186,652 minus 560. So I'm going to subtract 560 from that. And that's going to give me $186,092. All right. So the next thing we need is our direct labor. Our direct labor comes from our direct labor cost budget that we've already prepared. Our direct labor cost budget said that we had total direct labor of 241,406. Our factory overhead comes from our factory overhead budget. So our factory overhead budget is right here, 104,300 goes next. The next thing we're going to determine is our total manufacturing cost. That's our direct materials that we placed into production, plus our direct labor, plus our factory overhead. So this was our direct materials. We're going to add direct labor to that. And then we're going to add 104,300 to that. And that's going to give me 531,798. It's a good idea to check your work because this one's got to be right. It's going to feed into another budget. And then what we need to do is figure the total work in process during the period. And the work in process during the period is our beginning inventory, work in process inventory, plus the total manufacturing cost. So this column right here is added together. So I'm going to add to, yes, 15,300. And that's going to give me 574,098. And again, it might be a good idea to check your work. And it's a good thing I did, because obviously I did something wrong. 547,098. Okay, let's try this again. We're going to take 15,300 and we're going to add to that 531,798. And that's going to give us 547. I had a transposition error. $0.98. So this is correct. Now we're going to subtract our work in process inventory from that. Remember, that was the given amount from above that I just plugged in here. So I'm going to subtract out 14,800, and that will leave you with 517,498. Boy, I'm just having a tough time today. So let me try this again. 547,098. 547,098 minus 14,800. And that gives you 532,298. Now, once you have the cost of goods manufactured, you're going to add it to your beginning finished goods inventory. This column is totaled together. So I'm going to add 19,480 to this. And that's going to give me 551,778. All right, the next thing we need is our finished goods inventory. And our finished goods inventory, I've got an Excel spreadsheet that's got that calculated on it. So let's go back to the same spreadsheet I was sharing with you before. And we're going to look for our finished goods ending inventory, which is right here. Again, this information was given and you multiply it out, then you add it together, and that will give you 18,410 as our finished goods inventory, ending inventory. Then finally, we're going to subtract the finished goods ending inventory from the cost of goods manufactured. So I'm going to subtract the finished goods ending inventory from my cost of goods manufactured, and that will give you your cost of goods sold. Once you have your cost of goods sold budget, you're ready to move on to the next budget, which is your selling and administrative expenses budget. On the selling and administrative expenses budget, you're just going to copy in your selling expenses. They're giving you a list of your selling expenses and a list of your administrative expenses, and the total of your selling and your administrative expenses will be the total of your operating expenses. So all of these amounts are given. So what we're going to do is we're just going to go to the top, and we're going to look for our selling expenses, sales salary expense first. The sales salary expense is $184,300. And then we're going to go to our advertising expense. Which is $87,200. And then we're going to put in our telephone expense. And make sure you pick up the selling expense, $5,800. And then we're going to look for our travel expense. That was a selling expense. And it's $9,000. Then what we're going to do is we're going to add these items together. $184,300 plus $87,200 plus $5,800 plus $9,000. And that'll give us a total selling expense of $286,300. Again, you might want to check your work. And I've got that added properly. Now I'm going to list my administrative expenses, starting with your office salary expense, $32,400. Your depreciation expense on your office equipment, $3,800. And your telephone expense, that's the administrative expense, which is $1,200. And then your office supplies expense is $1,100. And finally, your miscellaneous administrative expense, $1,000. And you're going to total up your administrative expenses. If you've added everything correctly, it should give you 39,500. Might want to check your work. And then we're going to combine the two of these together to get our operating expenses. And check your work again. And this is the total of your operating expenses. The next item that we're going to prepare is our budgeted income statement. So again, they've got some things that you need to fill in here. So we always start with our sales as our revenue, and then we're going to subtract from that the cost of goods sold. What that will leave you with is gross profit. Your operating expenses consist of your selling expenses and your administrative expenses. And the two of these together will give you your operating expenses. And your operating expenses would be subtracted from your gross profit to get your income from operations. Then we'll list our other income, starting with our other revenue. Our other revenue is going to be interest revenue. Other items or other income or other revenue is all of the revenue other than the major form of revenue, which is sales. Your other expenses are all of your other expenses that are other than your operating expenses. So there was just an interest expense that was left. And then something that will be new to you, because we haven't talked about corporations before, and this is a corporate income statement. Corporations will pay income taxes. So when you subtract out, you're going to add your other revenue and you subtract out your other expenses to get a net amount. And whatever that net amount is, it's either added or deducted from or to your income from operations to give you the income before tax. Corporations have to pay income taxes just like individuals do. So the next title is income tax expense, which in this company has a 30% rate. Then what I would do is fill in the rest of these blanks. Your revenue from your sales is going to come from your sales budget. So we're going to scroll all the way back up to the first budget that we prepared. And the sales is $1,088,000. So $1,088,000 is going to be your revenue from your sales. Your cost of goods sold is going to come from the cost of goods sold budget that we prepared. It's $533,368. And let me double check those figures. 533,368. You will subtract the cost of goods sold from your sales figure. So 1,088,000 less your cost of goods sold of 533,368. will give you your gross profit of $21,264. And let me check that, because that doesn't sound like it's exactly right. I don't think it is. So let's double check that again. We're going to put 1,088,000, 1 million, and so sorry. We're going to put in $1,088,000. So make sure you get the right amount in there, and it still isn't right. All right, let me try this one more time. It's 1,088,000. And that comes from right here, the total sales. And we're going to subtract out the cost of goods sold, which was right here at $533,368. And what that will leave you with is $554,632, which is your gross profit. And we'll check my work just to make sure I'm okay, and I am at this point. The next thing is to pick up your operating expenses. Your total selling expenses was $286,300. Your total administrative expenses is $39,500. And if you add the two of these together, it'll give you your total operating expenses of $325,800. To get the income from operations, you're going to subtract your total operating expenses from your gross profit. So we're going to subtract $325,800 and that's going to leave us with income from operations of $228,832. Again, I would check my work, just make sure my math is correct so far. And then I'm going to look for my other income, which is interest revenue. My other income was given, my interest revenue is $940. My interest expense was also given. The interest expense is $872. Now you're going to combine these two to get a net amount. Since my revenue was more than my expense, this amount is going to be a positive amount. So 940 minus 872 leaves you with a net amount for our other items of not that. So let's try it again. 940 minus 872 equals $68. since my revenue was more than my expense, this is going to be added to the income from operations to get the income before taxes. So we're going to add the 228,832 plus the $68 will give you your income before income tax of 228,900. Check your work. And then your income tax expense is 30% of this amount. So I'm simply going to multiply this amount by 30%. And that will give me income tax expense of $68,670. And then I'm going to subtract my income tax expense from my income before tax to get my net income. And I'm going to do a final check to make sure my net income is correct. So as you can see, all of these budgets feed into the next budget. So you have to prepare these budgets in an order. And so that's all that I'm going to talk to you about for the budgets for this time or for this video. And I'm probably not going to go over your problem 22 dash, I think it was 2A, the only one that I haven't gone over for this set of problems, because it's very much similar to what I just went over with you. I don't think there's a need to bore you half to death with that again. So this is going to be the budgets that you will be preparing so far in this chapter. And so I'm going to leave it at that today, and we'll see you again next time. Bye-bye. Bye.